All right, guys. So what we're going to do today is just simply work on identifying specific patterns and understanding not only where these patterns form, but where the market can tend to identify itself on where it sets up and everywhere it sets up. So earlier we were talking about the head and shoulders patterns, and I was explaining how there's one that is upside down, which is the inverted head and shoulders, and then you have the regular head and shoulders. So one thing to keep in mind and for you guys to write down is the following. Understand that the market is going to, hold on one second, what? So what I want you to understand is the market will set up these patterns and formation. They can happen horizontally, they can happen diagonally, they can happen going downwards in a downtrend. And I don't want you to get caught looking sideways. I want you to look at the market as it goes up, as it goes down, as it moves sideways. In the end, I want you to become good at identifying this, because this is one of our key components to the three-step system when analyzing the market. Now, a lot of you guys are already starting to test your own little strategy, and I encourage that. But I want you to understand where the structure and the strategy comes from. Really just gives you the peace of mind and of understanding what the possible long-term direction is, what the possible midterm direction is, and what the possible short-term direction is. Now, if in the case where you can guarantee yourself at least 50 pips for the next 6 months, with the right account size, if you're using a standard lot, that's $500 a day for the next 6 months. A lot of people that don't understand what that is, if you do $500 for 6 months, right, at 30 days each, 500 times 30 times 6, that's $90,000 that you can put in your pocket within 6 months. This is a simple strategy that in the end, how you choose to attack it and how you choose to plan things out. As we move along further, understanding the key components such as where's a trend line, where's the downtrend, where's the uptrend, where's the market forming a channel, is the market forming a channel within that channel, So let's see real quick. Anybody want to give me a pair they want me to look at, and we'll identify the patterns through there. Let's see. I'm gonna pick someone. Let's see. Shadi, give me a pair.
USD CAD.
USD CAD. Perfect. US dollar Canada. Canadian dollar. All right, so I'm just gonna delete my previous drawings. And what we're gonna do is, all we're gonna simply do is just identify where support and resistance. For those of you still having trouble identifying support and resistance, always compress your screen. Identify where the markets have a key point in price. So see here how the market in the left touched resistance twice and reversed. And then towards the right, there's no price action there, meaning the market has yet to reach up here. I'm really not going to waste my time with that. But if I scroll to the left and use that same point of reference, I'll eventually find my third touch, which is 1, 2, 3. Now, as I continue going down, I'm just going to look for more points of confirmation that there's support or resistance. This one right here. I can identify one right here. And I don't want you going crazy looking for any support or resistance areas where your whole chart looks like a game of pickup sticks. And the reason why I say that is because a lot of you guys can get into the habit of having 1,000,001 support and resistance lines where you forget and get lost what's happening. So I'm just gonna look. I have 1, 2, 3, 4. All right, this is pretty good here. So all I did was break down my supports and resistance, right? Now, I'm just gonna find one random place of support. And what we're gonna do is look for a hammer, all right? A hammer. Now I can spot one right away. The hammer pattern, right? The hammer forms as support always. The hammer has a little to no upper wick, a short body, and it also has a long lower wick. So what we're looking for is a candlestick that fits the criteria that it's in support. It has little to no wicks, right? And it has a long lower wick. So I'm going to identify a few of them here for you guys. Here's one. Here's another one. There's a lot of them here. So see why you would not want to go ahead and identify any pattern and react to it. My goal and my rule of thumb is anytime I see something, I look for confirmation. I look for anything that's going to confirm that for me. So we have a hammer right here. We have it formed at support. Not only that, but the next candle engulfed it, meaning it's bigger than that. So as I can see here that the market was dropping. The market was dropping, right? And one of the things that you want to always keep in mind is when the market is dropping in this case, our goal is to find that the candle is at support and it's showing that the market is no longer going to continue going up, going down. So here in this case, if I look to see if the market is dropping or continuing to go up, all I got to do is identify where the market can possibly break out and retest. Now, simple. Keep things simple, right? If it's easier for you to understand, like when you're looking at a trend line, if on a trend line we're looking for 3 touches to confirm that trend, if my rule of thumb is that no matter how I look at the market, either downward, upward, or horizontal, all rules still apply, right? So here I have a resistance area where the market is testing it, and I have 1, 2, 3, right? In this case, on the third touch, let's go down one time frame so we can see more of that information. So we have the market come once, twice. On the third time, the market, what did it do? It came back to retest the breakout amongst these candles right here, this little group of candles that we have here. And the market formed another pattern that we'll discuss here and shot up. And what did the market do? Came back, retested, and continued going, right? So in this case, the bullish hammer on support confirmed that the market was no longer going down. And now we had signals of the market prepping to go up. Now, again, remember, there's more than one pattern. So if in the case where I'm looking at the market and I see the hammer, my goal is to say, okay, if I saw one pattern, is there another one coming up? Did it form one already? If I identified the hammer at support and I see that the next few candles already developed, what is that showing me? So we have the opposite of a hammer is called the hangman. It's the same rule of thumb, but this time it's found at resistance. So let's see if we find a hangman. And I can see one right here. And you see how it forms that resistance? It forms that resistance here, and the market went ahead and formed this inverted hammer, or in this case, it's a hangman because it has support. 1 second. I'm just gonna mute you real quick. I'm sorry. You notice how it formed at resistance. Then now we have the market signaling that it's no longer going to continue to go up. And as you can see, after this, we had the market drop. And then when the market came back to retest, it dropped some more. Now, there's more examples. Look at another one right here. As you can see within this candlestick, it happened at resistance. There's a bunch of them. Look, there's 1, 2, there's another one here. So this is why I want you guys to get in a good habit of identifying, okay, I seen that. That's a first sign. What else is next? So that's why there's more patterns that we can focus on. Here we have the inverted hammer and the shooting star, right? The shooting star is just simply where the market forms at resistance again, and the inverted hammer forms an upside down hammer just as support. Now, if you guys are looking at the same signs that I'm looking for the market to do it where? Anybody can tell me where would I identify if the market's going to go up after the market's drop, where would I look for my hammer or my inverted hammer? Let's see. Kasha or Daniel, you tell me. You're new here.
So right now I'm still trying to figure this out right now.
All right. So remember, real quick, if the market was going down, right? If the market was going down and we seen a hammer is just it's the name of this candlestick that forms with this way where it looks like a legit hammer. It has a small upper wick, right? And a long lower wick. Now, if in the case where if you guys want me to go over this real quick, within a candle represents time, right? And these candles, they're called Japanese candlesticks. And what they do is they form upper shadows, lower shadows, or in this case, upper wicks and lower wicks. And the bodies indicate where they open and close. In this case, this is the representation of a bearish candle, meaning a candle that's going down, right? A bearish candle opens at the top of its body and closes at the bottom. So let's say the market opened up here, and then it came up to the highest point here. And as the market continued to develop, since the candles represent time, right? The market came back down, and instead of it still having a body, it leaves this like little line, which is the wick, as the sign of where the market reached its highest point or its lowest point within that candle developing. Now, I'll show you on a 1 minute chart real quick how the candles open and close. So right now we have this 1 minute candle we see here. We have let me see. I'm gonna refresh my screen. Okay, so I have my screen here. So you see how within this candlestick, this candle just opened and there's 28 seconds left. So what we're looking for to see is how when the candle goes up, right? If the candle opened up here and the candle goes up, basically what's going to happen is you're going to see the body first. And then when that body fails to close at that price, it's going to leave this wick.
Right.
All right. So I'm just going to let you guys see real quick so you guys can see so we can get back to identifying the patterns so that we're all on the same page. Does anybody have any questions while we wait for these candles to show? Let's see. Chris Maldi, any questions for you? Don't scream at me, Chris Maldi. All right, let's see. So for some reason, USD CAD doesn't want to load up. Let me pull up USD JPY. Maybe this is a good. So you see how it goes up, Daniel? And when it shoots up and then comes back down in price, how it would leave that wick. And then now we have a new opening of the candle and the candle's going up. And then as it's forming, because each candle represents time. So in this case, we're looking at the 1 minute chart. And that 1 minute chart represents 1 minute for each candle. So as that 1 minute completes, the candle's developing its characteristic. You see that?
Yes.
So that right there the wick just signals the highest point within that candle's formation. So if we were looking, the same thing happens within a 4-hour candle, a 1-month candle, a 1-week candle. If you're someone who likes to get complicated and wants to look at, you know, the 6-month candlesticks, it's all the same. It's just it takes 6 months to complete that candle. So that one candle, you'll see the market doing, you know, moving up and down as the other candles are starting to develop their characteristics. Does that sound confusing, or is that understanding?
No, I understand that.
Perfect. So you see here how the candle now is forming a bearish, and then it comes up, and then how it automatically changes colors on its own, depending on where the price is. If the price goes below the opening or the closing price, you start seeing that, right?
Yes, sir.
That's what I want you guys to identify. So as these candlesticks are developing itself, you see how they start to trend amongst each other. They start to range amongst each other. We spoke about accumulation and distribution. Accumulation is when the candles range within support, right? At the bottom of a zone. And then distribution is when the market happens at the top at resistance. Talk to me, Pablo. What's up? Pablo, right in here, not in the chat.
Oh, okay.
You good.
So you see where literally right where your cursor is, where the candlesticks would just constantly keep forming. Is that where you can identify the volatility of that certain market? So if it's forming that many candlesticks in like a short period of time, is that where you're like where you would not do a trade because it's more high risk?
When the market is moving sideways?
Yeah, when it's like that, yeah.
Well, I would wait. Remember, the way I'm teaching you guys to trade is to wait for the breakout. So let's say I drew out my support and resistance areas here, right? Excuse me. If I sorry. If I entered the market here, what the fuck? If I entered the market here on a sell, right? I don't want to catch this downward movement and only be in the market for about 3 pips. It doesn't make sense, especially when I'm looking at the 1-minute chart right now. What I'm waiting for is the market. Okay, if I start to see that the candles are moving sideways, right? Just like if I saw the market moving upwards, right? We have an uptrend here. Or if I see the market moving downwards. You see that? I train my eyes to look at the market in all ways. If I see that the market is in a channel horizontally going down, that's called a what, Pablo?
Oh, okay.
What is that called? When the market is going down and you identify both support and resistance of that downward movement, that's called a what? What kind of channel?
A downtrend. Descending
channel, right?
Sorry.
You're good. Don't be sorry. So here, if I have an ascending channel, right? And now if I see that the market is moving here, right? Remember, there's 3 different types of channels. If I pull up my screen here, we have a horizontal channel, or as most people call it, a zone, you know. Then we have the ascending channel and the descending channel. How do we tell if there's a horizontal or a descending or an ascending channel? You look at the high points of the candlesticks, right? You see here how there's no higher high or lower lows. It's been ranging sideways. So what I'm teaching you is to identify when the market does this here, where when it fails to break out and retest, right? What I'm going to look for is to enter here. And then when the market comes out and breaks out and retests this area here, enter here and try to catch that downward movement. You understand that or no?
Yes. Now I understand. I
Perfect.
understand a lot more about the kind of situation more as well. Like with hammerheads. I was taking notes this whole time, so it's kind of mixed up. But what I had down is like a wick is there to show where the market has reached its highest or lowest point within the time the candlestick was active, or
Correct.
growing or becoming smaller.
Correct. And then remember, you want to. Most people always ask me, okay, do I draw my trend line or my support or resistance on the body or the wick? It's up to you. I like paying attention to the wicks, but I also like to do my trend lines on the bodies because sometimes, if you notice here, where the wicks reached here on this downtrend here that I'm looking at, right, this descending channel, not only are the wicks lining up to the body here, but we see that the market broke out and retested this exact point. So I'm lining up where my trend lines and my channels and everything that I'm drawing out within the market, that they line up with each other, not just based off of one candlestick or two. If I need 3 candlesticks to confirm, I'm going to go ahead and draw my support and resistance based off of that, So in the end, remember, as now we understand what candlesticks, how they open and how they close, I want you guys to keep that in mind. Keep that in mind because you see here, remember we were talking about the inverted head and shoulders pattern? You see how most people won't identify that because it's sideways. But at the same time, we have the fake out, the break back in, and the retest. Simple, right? Market came back up, and if we draw our support or resistance line here, we have the market coming, breaking out of this point, retesting, and continue to go up. So I want you guys to really build a habit off of not only just understanding this, remember, understanding, but be able to identify it. Because a lot of this comes with repetition. A lot of it, being able to identify it and then saying, okay, I seen that pattern, let me go ahead and follow this. When I gave you guys the cheat sheets, let me pull them up real quick so you guys can look at them with me. I gave you cheat sheets for when the market reverses formations. You have the structured cheat sheets, right? Confirming what an uptrend would look like or what a downtrend would look like, what a descending channel would look like, what an ascending channel would look like. We spoke about accumulation where the price ranges at the bottom of the zone. And then once the market fakes out, usually right here is where you would spot one of these inverted head and shoulder patterns, right? We spoke about breakouts and fake outs. What's a confirmed breakout? When the market breaks out of a structure. Anytime to confirm the direction of the market, if the market broke out of a price range, right, the market has to come back and retest. So you see here, market broke out, retested, continued going up, broke out, retested. Is the market going to continue going up, or did the market lose its pressure on its upward movement? That's where you start identifying. Now, as you get good at identifying where support and resistance is, and I want to stress this out, I want you to also understand the following. You're not going to need to draw out a million lines because one of the things I suggest you guys to do is use the trading view tools. For those of you guys who are new here and have yet to play with trading view, right here, this is your little sub menu. In this sub menu, you're going to have a whole bunch of tools next to the ones that they already show. If you click on the little arrow on the right-hand side. And what I like to do is I really like to just identify where the market would show based off the highs and the lows of the candles. If the market failed to break a point like this right here, where I draw this horizontal box here, I'm going based off of the resistance of this candle or this zone right here and the support here. I noticed one thing, when the market came to retest this price point here, it failed to break that resistance of this lower zone here. So what happened? The market dropped. As you can see here, based off of the support and resistance levels that I have drawn out, you can see that the market is respecting them. So as we start coming back upwards, right, based off of the support and resistance, if you notice that the market broke out, if you were buying in this case, based off of the fact that you saw this little head and shoulders pattern, you'd at least already have your support and resistance level to pay attention to. So again, these are some of the rules that I really want you guys to understand. If I'm moving too fast, guys, please don't hesitate to stop me and get your questions answered. You know, in a lot of this process to help things become easier for you guys, like anytime that you take in new information or that we review any information, I highly suggest you go out and practice and identify yourself. You know, if you're someone new joining the school and you want to get good at identifying trends, right? Here we're gonna delete all this stuff here and we're gonna focus on drawing trends, and all of this will tie into each other because of what? If I'm on a downtrend here based off of these candles, this candlestick group right here, guess what? You know, if you stretch this out, you'll eventually be able to see where the market, see how here the market respected this extended trend line from here. And then if I extend this here, I'd be able to see where the market failed to resist here. So it's like, in the end, everything connects with each other. If you're someone that needs to do that, where you're connecting both your support line along with a downtrend line, you know, go for it. But make sure that you're practicing this, because guess what? Look, let's say right here where the market broke out and the market came back to retest here. Look how the market's identifying to us that the market is no longer going to continue going down, right? We have here a few candlesticks, but guess what? Look at this right here. Here we have the market giving us one shoulder. Here's another shoulder. And here's the fake out. If you're trying to identify that fake out, right? Here's the market breaking out. It broke back in. Right here, the market failed to continue going down. We had a strong candle here, but guess what the market did? It respected this, excuse me. It respected this support area right here, right at the bottom. And if you extend this line here, I can extend this. Let me just put a horizontal line to make it simple. The market failed to break this point. So guess what? When the market came back to revisit this area here, the market simply just broke it. And let's see until when was it that the market came back to retest that price point. And as you can see here, the market came back and barely retested here. But when the market came here, we had somewhat accumulation or some ranging in price. And that's why it's important for you to understand your levels of support and resistance, because in the end, you may not need it now, but down the road, oh shoot, look, I had my support and resistance here. The market failed to break out of it last time, right? When the market did break out of it this time, look how long it took from December 6th to December 10th. In the last 4 days, we've seen that the market never came back and actually retested that line of support or resistance. Now, maybe you can bring it down a little bit to like where these wicks are. Maybe that is the retest there. But again, that's to your preference. If you're someone that likes to have the trends and the channels drawn upon like how tight or, you know, how precise you want to be with it, you know, again, repetition is going to come in handy, because as you get better at identifying that, you know, let's look at the patterns that we were talking about. Here we have the market forming a range in price, right? We have a bullish engulfing candle here. So if we pull up our chart here and we look at the double candlestick patterns, a bullish engulfing candles pattern shows a strong sign that a bullish move is possible. Happens when the bearish candle is immediately followed by a larger bullish candle. So we see right here, this was a bearish candle and it was immediately followed by a larger bullish candle. What happened? The next 1, 2, 3, 4 candles were bullish, and then the market came back, kind of like, you know, ranged for a little bit and then shot up. So now I'm sure in this point around here, the market simply, all it did right here was just break out, come back to retest, and continue going forward. So you see how we start identifying these patterns, how they show us that sign of signal. But guess what? We still need more confirmation after that signal is given. So think of it like this. If the market broke out, you're not going to assume right away that the retest is going to happen, because what? It's a possibility that it's a fake out, right? So in the case where you want to put yourself in best hands and in the best situation, it's best to wait out for the retest, or simply come in and use one of your little buy limit orders or sell stop orders, or whatever it is that you're predicting. Use one of those to come in play. So if you want the market to come down and then go up, and you know that the market is not going to continue going down, put a buy limit at this support area here. When the market comes, opens up your order, boom, you caught all these pips right here. Did I lose anybody there? Any questions?
No, I understand.
Perfect. How about you, Danny?
I'm good. I'm starting to catch along here.
Perfect. And remember, man, I don't want you to feel hesitant to be like, hey, Jose, wait. You know, because in the end, remember, I'm on your time. You're not on my time. So one of the things that I like to reassure people is that make sure you do ask me questions, because I'm gonna continue talking, thinking that you're starting to understand me, and then I'm not, the worst part is when you're put in the situation when you don't understand me and I just keep talking and then I lost you. I don't want to lose nobody,
Right.
Alex, any questions?
I'm gonna I don't want to interrupt if Alex was gonna say anything, but I'm gonna just go back to using the demo accounts for a little bit, because now that I understand it a little better, before I start putting real money into it, which is something I want to do by the end of this week. I'm just gonna use the demo accounts to see if I made any progress from before, because when I used to do it, I would just wing it. I would assume that if I was to sell or buy a certain, that it would just make me some profit. Like, I would lose a lot of money in that account, but it's fake money, and they give you a deposit of $100,000. So it's like I played around with that.
Yeah, but remember, look, I want you to understand something, and this is a mistake I made when I was coming up. And remember, rule number one: I asked you to not fund your account until you can show 1 month profit for that specific reason. I don't want you getting caught up and involved with the fact that you deposited money, you made $5, $10, or you doubled your account, and now you're starting to feel like you're a millionaire. Those are things that everyone's gonna encounter. Everyone's gonna feel that, oh man, I doubled my account, I made $200, and then you come and make a mistake and lose your whole account, and now you have to you have to put money back in.
That's a big issue for me, because especially since I'm younger, I have like a tendency to just be more complacent. So if I was to have that same situation where I would double of like $5 or something, I would find that acceptable, and I would continue to put more money into it, thinking that I know a lot, when in reality I don't, which is a bad thing. But
I'm not telling you not to take no risk. You understand, Pablo? But I want you to also understand, if you're trading a demo account, treat it like it was that's your real money, because you're not gonna grow from it treating it like, oh yeah, it's fake. It's a fake $100,000 account.
Yeah.
Honestly, man, like my best advice to you is stick with the demo until you can show yourself that you can trade profitably. And it's not that hard to do a month consistently. Just trade what you see. Don't trade what you think you see. Start working on identifying these things. Get good at identifying the breakout of a trend. Get good at identifying the breakout of a zone. Get good at identifying when the market fakes out of a zone, when it fakes out of a trend, when it fakes out of a channel. Get good at identifying that, and then putting the pieces together, and it's really gonna make sense for you.
I'm gonna focus on the strategies that you use, just so I can put that into practice myself while I use those demo accounts. And hopefully when I actually do use real accounts, I make some good profit with that.
No, hopefully when you do, bro, change your mindset. That
Right.
when you change, when you understand that you speak things into existence. So like one of my good friends in here, Joe Mario, says when you say that you're trying, you forever stay stuck trying. But when you say that you're gonna do it, you're actually gonna be in place to start doing. You know. So let's see. Chris Maldi, any questions?
Not at the moment.
Perfect. One of the questions I did have for you, Chris Maldi, is what have you found yourself having a not so much of a hard time seeing, and what have you seen yourself struggling finding?
Actually, what we're looking at now, the charts. This is like this.
Uh-huh.
This is like, I guess so. Like I got like blacked out, kind of, because I really don't like. I understand when you're explaining it, but like when I try to like look at it, because I downloaded the app, so I just get so lost. So this is like one of the hardest for me. But I am understanding the candlesticks, the cheat sheet. I've been looking at it like every day.
Mm-hmm.
And I'm like, all right. So when I go on the trader stuff, the trader's view, I'm like, all right. But I still get lost, because for me, I'm like, I'm a little slower. Not really, but you know, I need more time to understand it. I need like to sit down and be like, all right, and like for like you're explaining it to me like this, but I'm like still kind of lost. I don't know if you understand.
You know what you're going through. It's just like, because a lot of this is fairly new to you guys. I mean, you just got started. You know, Daniel got started, and a lot of people, we all learn differently. That's why I try to have this mutual approach with everybody, where like I reassure you to ask me questions, and if I know you have a question, I'm gonna ask you. You know, because in reality, like again, I was in your shoes once, so being in that position, it really puts me to understand, like, okay, I know Chris Maldi off the top of my head is having a hard time identifying trends. Like, let me go over trends real quick. You know, and sometimes I promise you, like identifying patterns and formation, like that's just part of the game. You know, like sometimes just understanding where like the trends and the channels and the zones are, like you can be successful with that. Like, you know, like understanding, okay, the market broke out of this major downward channel that it was in on the daily chart. So if we go back to the daily chart and the market was trending downward, then I know at least to say, okay, it broke out of it. When it retests, I'm going to enter this trade on a buy, you know, and then you make money like that, keeping things simple.
Yeah.
But
I have a question.
Yeah, talk to me.
I know you, maybe you've been explain it. But when it goes down, that's when you're like getting losses, or you're getting losses either or, up and down?
Well, it depends on the position you made.
Okay.
If you're buying, if you enter to buy, you want the candlesticks to go up.
Okay.
If you're selling, you want the candlesticks to go down. That's why I say you sell at resistance and you buy at support.
I remember that. Okay, cool.
But tomorrow morning, let's get on a webinar. We'll do like a little one-on-one, you and me.
Yeah, I'm available. Cool.
All right, perfect. Let me see. Brad, any questions, Brad? Joe Mar, you got any questions?
Hey, just unmuted myself. Nah, bro, I understand. I've repeated all this information so many times.
Yeah, perfect. No, you know, like I just want to make sure that everybody's on the same page with me. But it's good to have you on with us, man. Let's see. Jose Gonzalez, any questions?
Y ese tigre está aquí.
We're good.
Está brillando, Jose.
Se tiró un duro.
Let's see. Kasha, are you there with us? Let's see. I don't know. She probably muted at work or something. We got Andre with us. He said, "Que lo que coño."
Andre's here.
Shadi, you got any questions, bro?
What happened?
You have any questions?
No, bro.
All right, perfect.
Oh yeah, I have one. Just the entries. I mean, what's the best entries? Because sometimes I enter just one, and I see too many opportunities to enter again and again, and I don't have the confidence to enter again.
Well, remember, the way I teach you to enter a trade is to enter after the retest of any breakout or fake out. So if you're gonna enter a trade, remember, like, if the market in this case broke out here, right? I'm gonna look for the what? The retest or the failure to retest. In this case, somewhere along this candle here, in the smaller time frame, there was a breakout and the retest, and then the market continued going down.
So okay, if let's say you're looking at the daily resistance, right?
Uh-huh.
And then you see a breakout in the 15 minutes. Is that considered as a breakout, or can you go long in that or no?
Trade, yeah, remember, if I'm looking at the 15-minute chart to enter my trade, right? We spoke about that a long time ago in terms of when the market breaks out or fakes out. If I'm looking at the daily time frame, right, I'm understanding the following what? Look, the market failed to break out here, right, and dropped. When the market came back to retest this area, right, the market opened up on a gap here, and then it came back up now. So now if the market is going to come out and break out of here, which it already did, and come back to retest the support, if it did it on the 15-minute time frame, right, I'm looking for the market to come back and retest here. If it does that on the 15-minute time frame, how many 15-minute candles will represent one day?
A lot.
Do the
24
math,
times 4.
right? Then that's how many candles you should keep in mind, because the next daily candle may be, maybe in the next day the market came back as that daily candle was forming. In the 15-minute chart, the market not only came back and retested and started going up, but it broke past that area that you wanted it to go to. So there's a lot of ways to look into it, but the simple way is that what you see in the 15-minute time frame, you're gonna see in the daily time frame. Just understand that the daily time frame is a lot slower because each candle takes one day to form. So what does that mean? If in the market on the daily time frame broke out, in the 15-minute time frame it can go higher, but on the daily time frame it still needs to come back and retest if it broke the structure. You understand?
Oh, I see. Yeah.
So even if the market, in this case, the market broke out, right, and came to retest this area here, right, in the 15-minute time frame, this long red candle that we see right here, that could have been so much different things going on. It could have been a whole nother ball game of breakouts and retests. But that's why I gave you the structure to look at the charts the way I did. So not only do you understand what's happening on the daily, but you also understand what's happening on the short term, right?
Mm-hmm.
Danny, if in the case where I lost you, I just want to kind of go over that. So you too, Chris Maldi. I gave you guys a 3-step system to look at the market. All we're doing is on the first step is looking at the long-term direction, right? We're using the larger time frames like the monthly, the weekly, and the daily to identify if the market is going long-term up or down. The second step, we're using the 4-hour, the 1-hour, and the 30-minute, just simply looking to see if the market is going up or down. In the second step, we're looking to see, okay, if it's going up long-term, am I in a better position to see the market reverse and come down, right? If the market is going up long-term, and if it's going down, if I'm going to enter this trade, should I rather wait for it to come down and then buy, or am I in a position to enter that trade on a sell for the period that it's going to drop? You understand? So that's why I gave you guys these time frames to look at it. I gave you guys in the cheat sheet, again, some questions to ask yourself, because we use a system of confluence. Confluence is 3 or more confirmations. You understand? The more confirmations you have, the more confidence you'll have. If you know for a fact that, let's say, a pair of sneakers were coming out on Saturday and you just didn't hear it from someone, now you're starting to see some advertisement, then you see some websites posting the websites for it and stuff like that. You have more confirmations, meaning, okay, now I'm more confident that these shoes are coming out. Well, the same thing goes with the Forex market or in the stock market or anything. The more confirmation that you have, the more confidence you have. You understand? So I hope that answers your question, Shadi. But, in the end, remember, what happens on the 15-minute chart is gonna show different than what happened on the 1-hour chart. Because if on the 15-minute chart the market broke out and retested, it could also be a fake out on the 1 hour or the 4 hour. You understand?
Mm-hmm.
So just always keep that in mind. That's why I always tell you, and you specifically, like don't marry the trade. Okay, the market's going up on the 4-hour chart, but on the 15-minute chart, the market is dropping, and now I'm kind of getting scared because the market looks like it's not going to go up. But in the 4-hour chart, it's showing us, it's just a minor drop, So that's why I want you to get comfortable at looking at different time frames. But I mean, I've been talking a lot here, but I want to go back to the candlesticks. Remember, in the cheat sheets, for those of you guys, download them, look at them. I have on the cheat sheets, how they open up, the different types of candlesticks. Then we have like the bullish candlestick patterns. We have the hammers, the inverted hammers. Notice all of these form at what? Anybody can answer? Bullish candlestick patterns form where?
On the support.
On support, correct. So if they form at support, we buy at support, right? And bearish candlestick patterns all happen at resistance, right? So let's look at finding some of these candlesticks.
Jo.
Talk to me.
You know how it's a school night? I'm gonna be having to head off now, just because I want to get enough sleep, because I gotta wake up early.
You good, brother? It's good to have you on here. Don't worry about it.
Yeah. So
everything's recorded. I'll post it on the I'm uploaded to YouTube and post it to you guys later.
So you know how I was taking some notes during the meeting. Like, is there anything specifically that I should take down? Like something that you think is very important for me to remember?
Repetition. Keep learning keep applying what you learn. Keep getting good at so if I'm talking to you about a trend line, get good at identifying trends. If get good at identifying everything that I teach you, because you're gonna need it.
All right, and then focus on the cheat sheets, right?
Use the cheat sheets if they help you. Correct.
Okay.
But you and I will do a one-on-one before the week's over, so like that we can catch up on our own too.
All right, cool.
All
so
right.
I'll just stay posted on Telegram.
Yeah, I'll post the video once it's done. But thanks for coming on, man. I appreciate it.
No problem. You guys have a good night.
You as well, brother.
Yo, take care, man. Que lo que.
So, you see how we have the triple candlestick patterns at the bottom. You have the double candlesticks and the single candlesticks. We were identifying the hammer. We're identifying the inverted hammer. Here's a perfect hammer that formed at support. Now here may look like resistance, but you see what? The market simply just broke out, retested. We have a hammer right here. The next candle engulfed the previous candle. That's called a bullish engulfing. That's 2 confirmations that the market is going up. After that, we had the market come in and kick in and show us that the market was still going out. Why? Because it broke out, retested, continued going, broke out, retested, shot up. You see that? So, Daniel, as we're going over this, now that you're starting to, see some of these candlestick patterns, what's the one rule of thumb? If you identify any candlestick pattern, what is your next move?
Well, I can see that it's going up. So some of them are basically kind of like, what's the word I'm looking for? This pattern seems as if it's it reciprocates the other.
Mm-hmm.
So for example, like this first hammer right here, I see another one that's kind of like opposite, and it just and it happens a few times. I see 3 of them actually back to back, and it keeps on climbing.
Yep.
So it's just I guess that's a sign, an indicator that's is going to continue to go up.
Yeah. So remember, not only with that assumption, but understand the following. Anytime you see anything, you see a candlestick pattern, you see the market break out, you see the market retest, look for the next confirmation. If that requires you maneuvering through time frames, make that a habit. If the market broke out of support, right? And then it came back to retest it, and in this case formed a hammer here, right? You can enter the trade right away, but what happens if that's just a fake out? What if the market comes back and retests and continues going down? You know? So sometimes the comfort of waiting a few more pips of the market making its move and then retesting is always a better option than just reacting right away and possibly catching this downward movement just because you saw that the market came back to retest and you thought the market was going to continue going up. You see?
Okay.
But then
Gotcha.
ignoring the fact that, look, we have a what? We have a head and shoulders pattern right here. You see that?
Yep.
And you see one shoulder, second shoulder in the head. And
Yep.
how the head is the fake out, and then it retests, and then what it did, drop. So that's why I want you guys to build that habit of identifying not only what's happening, but what can happen. Because in the end, when you have more confirmation, Danny, I promise you, anybody in here can attest to it. When you enter a trade and you're confident that it's going up, that shit feels great. But when you enter a trade thinking it was gonna go up and that shit drops and you're losing money, you know, it really helps you question yourself and your freaking purpose in life, and you start saying to yourself, man, is this for me? And then there goes the questions, you know.
Right.
But that's why I want you guys to understand. A lot of people leave that fact out. Look for confluence. Look for 3 or more confirmations. You know, 3 or more confirmations. Okay, I see my hammer. All right, my next confirmation is what? Okay, the first confirmation prior to the hammer was that the market broke out and retested. That's one confirmation, right? The next confirmation is that the hammer came up, and then the third confirmation is what? That we have an engulfing candlestick. If I draw my resistance or my support at where this candlestick is, I can see what? The market, when it broke out, it never came back to retest it. So now that it broke back in and retested, maybe I'm in a better position to attack that market. So I enter the trade here on a buy. The market starts going up. When it breaks out and retests and continues going up, where's the market coming back to retest? I just simply start drawing out my supports or resistance to help me identify those areas. Here's the market breaking out. It came to retest, shot up. Guess what? I entered the trade down here and closed the trade up here. I made 70 pips. 70 pips on a $1 lot at $700. And this took a few hours to play, but think about how long it takes the average person to make $700. You know? So that's one of the things I also want you to build into perspective for yourself. Always understand and remind yourself, damn, how long does it take me to make $700 of hard work, or what I do? If you're someone that's already, you know, financially made, you know, put in mind, hey, I put $700 in my pocket in the last, you know, let's say 1, 2, 3, 4, 5, 6, 7, 8. In the last 2-3 days, you know, $350 a day, that can keep a job away, you know? So in the end, confirmations, confluence, putting together all this sense of information that I give you guys, it's really, really simple as long as you keep things simple. Here's another pattern we were talking about, right? We have at support, we spoke about a morning star, right? The market came, right? It was going down, and the morning star formed right here with a bearish candle, right? Then we had this short body, and then a bullish engulfing candle. That right there is a signal that the market is going to go up. So we have that market there showing us here this. Look what happened right after that. You understand? Here's a evening star. The market formed this evening star after a bullish movement. When the evening star pattern formed right here, it showed that the trend was no longer going to continue. At no point did the market ever come back to retest these highs. Instead, it started creating what? Lower highs. The market came back down. It broke back into the structure that was happening here. Retested. Look how far it dropped. You understand? So this is why it's easy and simple for you guys. If you guys just take your little cheat sheet, identify them. Here, 3 white soldiers, right? 3 white soldiers, simple. Look for 3 bullish candles happening at the market. See here how the market formed this support here, and we have 3 white soldiers. If we go to our candlestick, 1 second. Our candlestick description here from our class. This is the type of triple candlestick pattern that's like legit right in your face. You know, it's right after the downtrend happens. To confirm this 3 white soldiers pattern, the first candle has to be opposite of what the previous trend was. Right? After that, the second candle must be larger than the first candle. And to confirm, the third candle needs to be either the same size or it has to have little to no wicks as the previous candles. So if we look right here, right, this first candle, right, was outsized by the second candle, and the third candle was either the same size or larger with little to no wicks, confirming that the market is going to go up. If I look at what this market is doing, we have Andre, what kind of pattern is this right here?
Which one? Which one, big bro?
Yeah, I'll send it to you right now, Joma. What pattern is this? After a bullish move and we have lower highs and higher lows, what kind of pattern is that?
It's either a pennant or a flag, a bullish flag.
Correct. And what does that signal for us?
A continuation, boy, to the upside. Gang, gang.
So you see, a 3 white shoulders pattern is a bullish pattern, and then we have this pattern here showing us what? That the market is going to continue. What happens there? We understand that if the market breaks out and retests here, our next target zone would be what? To come and retest this area over here. You see that? Does that make sense for you, Chris Maldi and Daniel?
Yes, it started to yes.
Perfect.
Yes.
As long as we're starting to make sense, that's what I heard one of my old YouTube videos that I used to watch when learning this. He says, if it makes sense, it makes dollars. So as long as we're making sense. Let's see real quick. I know I've said a lot. All right, perfect. You got them? I was just emailing them to you from my phone. Jose, when the market breaks out of a support area, what does that support now become?
That'll be your new resistance point.
Exactly. Can you on my screen point to me where the market broke a support area and became resistance? You know how to draw my screen, right?
No.
All right. If you select the annotate, like the little pencil, you'll be able to draw on my screen.
All right, let me figure this out.
What are you on, your phone or your computer?
My phone.
Easy, I'll tell you right now. I'm gonna join on my phone. So if you go on, if you click on the little blue pencil, the little blue circle on the screen, you see that? I just posted it on the group chat. You can see.
Yeah, I see it now.
Yeah, so use that and point to me where a support became resistance.
It looks super crazy. So I'm trying to do it on the phone, but I don't know if you can see it.
Yeah, I see it.
Probably not.
So the support, the bottom line was your support, and the market became resistance. But what I want you to show me is here. You see, for instance, here, how this was support here. And then when the market broke back down into this zone, it now became resistance because it retested it.
Yeah, and that's a new zone.
You see that? So that's what I want you to point out for me. Let's see. Alex.
Sure.
Give me 2 reasons why the market right here, what caused the market to go up? Or I put this red circle. Give me 2 reasons why.
Why it went up, or like what pattern I can see there. So that's, I see the double bottom.
All right, so a double bottom. So I'm just gonna pull up what a double bottom is. Double bottom is when the market touches the support twice, right? What else? What else would have made you buy this if you noticed it?
Hold up. I'm not sure. If I would have bought this, I would have bought it because of the double bottom.
All right, perfect. And remember, anytime the market breaks out of something, it has to come back and retest, right? So, right, not only that, but if you notice one thing, what happened here? The market touched this line of support 3 times. So that can actually be a triple bottom.
Yeah, I was looking at that too. It touched it twice. It created like a double bottom there, and then it got kind of rejected up here at the top, and then it came back down again and then shot up.
Correct. So in that case, right here, this was a double bottom for the moment, but in a larger time frame, this whole structure was a double bottom. You understand? So if I look at the 4-hour chart, right, I'm going to see my double bottom. You see that? Is my internet cutting in and out for you guys?
No, you good.
All right, perfect. So real quick, let's talk about something else. You see how sometimes here the gaps form? Like, so Daniel, what happens is here when the market closes on Friday and then the market opens on Sunday, sometimes there's gaps. They form gaps, right? From the opening of the new week's price to the last week's previous close. And there's a report that says that about 85% of the gaps fill, which I have a hard time agreeing with because eventually gaps do wind up filling. What they mean by is that when the market opens with a gap, 85% of the time within that opening time frame, that the market will come back and really refill it right away. As you can see here, This gap happened November 30th to November 2nd, and it wasn't until November 5th that the market came to fill it up. And what I mean by fill it up is if you notice when like the top of the candle meets the previous candle's low, that's usually a filled gap.
Another thing, another quick comment on gaps that I started studying in the past couple weekends. If the last, like when US closes at 5, that last candle pretty much dictates how it's gonna open up the next on Sunday.
Correct.
Like you see right there, like where you had this little pointer at.
Yeah.
And it ended on that down bearish red candle, and then it opened up way lower.
Mm-hmm.
Same thing happened up top here, like this past weekend, I think it was.
Mm-hmm.
The last candle of the day was bearish, and it opened up way lower.
And not only that, what most people don't understand is, look, what happens when the market creates a rising wedge after a bullish move? Bearish, right? So here, all the market did was just as if the market was still open. You understand? But what I want you to pay attention to, whenever, and excuse me if I throw you off, Danny, real quick, but I just want to mention this to the other guys. Just identify where your support and resistance are. Like you notice here, right here, this may be my 4-hour resistance, but if I go on my daily, this simply can actually be my daily support area here. So when the market formed this bearish engulfing candle, I at least knew that this was the support zone and that this was the support zone, so that if the market did open up below where the market is, that I at least have an idea of where I can identify the gaps at. And one of the things I've really been focusing on over the last few weeks is predicting gaps. And this week I predicted GBP USD correct. I predicted USD JPY correct. And a lot of it has been exactly how Alex said, is paying attention not only to what the candlestick's showing you, but the actual structure that the market last closed with. You understand? So hopefully that helps you guys out. If I lost anybody, please ask any questions. Why don't I open up the mic to you guys? What do you guys have to say? Anything you guys have discovered? Anything you guys want to share with the school? Let's see, Andre, how you been doing trading?
Good, man. Good, doing good so far. I mean, what did I look at? Last webinar, I was speaking about Euro AUD. I think that's what I was talking about before.
You want to share your screen with us?
Yes. Give me a sec. Let me actually pull up Trading View. So I was checking out Euro AUD. Where is it? How do I? There you go. Share. All right. You guys can see it?
Yeah.
I see your screen.
Okay, perfect. So I looked at Euro AUD, and my bias towards it was a sell, just because we were somewhere around here when my analysis was okay. It'll hit the 200 EMA and go downwards, but then it actually went a little further, and then this is that fake out, and also it showed me a evening star right here. I don't know if you guys can see that. From here, I usually draw like rectangles to see where consolidation happened after a big move. This was a big move down. So then after I consolidated here this is the 4-hour chart, by the way. So timing here is, these are 4 hours, not 15 minutes. So this is probably a good 3 to 4 days right here, maybe 3 days. And after I made its way back down. So right now my sell point was, let me see, where did I sell it at? 57.66. Right now I was at 57.66, which is somewhere around here. And my stop loss is past, just right above this doji. Sorry, not doji. Evening star. So my risk to reward, I know that the London market's open in about 2 hours, so that's where more of the momentum is going to come in. But if it comes back and shoots and retests this as a resistance, I'm going to get out right away and just see where the market actually takes it.
And remember, just to give you a quick heads up, your moving averages play as support and resistance in this case. So, like, you know, you have the different time periods. You have the 200 EMA. You have
the 50 and the 13.
Yeah, so in this case, these serve as support and resistance for you. So the same thing, the same rule of thumb plays into this. If the market breaks out, you have to see the market come back and retest it.
Right.
So, I mean, right here, I'd keep an eye out with this because the market seems to be retesting the breakout area right here.
Right here, right?
Yeah. If the
and
market,
I see the flag, so I don't know if you see this little symmetrical triangle after this bullish move. So it did. I mean, it made sense why it made its way up.
Yeah, but two things can play out here, just so that you and I are both on the same page, and you understand. So, hold on one second. So two things can happen here. If I were you, simply identify where your market's trends are, right? Right here, I'm going off of this because of the last point of this yellow support area you have here, right?
Yeah.
And I want to go ahead and drag this line here. So, and remember we were talking about identifying where those support and resistance areas line up with your downtrend and your uptrends. You'll start having a good idea of where the market could potentially create. If the market does drop here and create like a head and shoulders pattern in this case,
right,
you'd at least have to start noticing where that's happening. And then not only that, you have the market drawing that double bottom here. Now that's one possibility here, right? If that's the case, if the market starts doing that, where you have to keep in mind is, if it does create this, be careful if the market is just coming to touch this area here and really setting up the push up.
Yeah, for that, that's an inverted actually.
There we go. So that's why I want you to understand. But good stuff here. Good. I like how you're organizing your charts. They look way better than before.
Yeah, man. But I mean, especially with bigger time frames, things like this is your accumulation before it rises up. Distribution. My bad.
Accumulation would be right here, like right below it.
This one.
This.
Okay.
That would be distribution. But remember, here the market distributed, right? And when it broke out to come and retest it, it was supposed to drop.
Right.
In this case, it didn't. It actually formed a double bottom right here and shot up.
Right.
See that?
Yeah.
Good. Go. Let's see. Anyone else want to share their charts with us? Let me see. Alex, why don't you share your chart with us?
Yeah, my thing I have two different computers. So one that has Zoom is my laptop. The other one, my charts are on my desktop.
All right, no problem. Let's see. Make sure you create an account with TradingView so that you can always access your charts either on your phone or on any computer.
Oh, I have. Hold on. Let me see if I can try to get that. Somebody else could go while I try to get that.
Let's see, Shadi, why don't you share with us one of your charts?
Let's see.
Danny,
can I do through the iPad or no?
Yeah, you can. Danny, as this being your first day with us, how are you enjoying this? Do you feel like we're moving too fast for you, or like
none?
Helpful.
No, it's helpful because some of it, obviously, like I'm not gonna catch on to right away, and some of the more advanced stuff, I am, and it's starting to help put together some of the other stuff that, I was a little bit lost earlier, but being the first day, like I'm starting to put some things together, and being able to see this kind of gives me some sense of comfort that what I'm learning, I can start piecing together.
Yeah, of course, man. Believe me, man. I promise you one thing, this. You join us every night when we do these things. You reach out to me. In a matter of 2 weeks, what you're struggling with understanding today is going to be like, man, how the fuck I didn't really understand that in the past. You know, I have a student in Australia. Her name is Janelle. She's a mother of two. And at first, like, she would keep telling me, I'm sorry. Because, you know, she kept making me repeat things, but I kept telling her, it's fine. I'm like, don't stress that out. And yesterday we were on the computer going over some charts, and she was breaking down the charts to me, guys, like a freaking pro. Like, she was like, yeah, look, the market broke and retest here. She even spotted some areas of the market making specific movements and signals that I was overlooking. And I was like, wow. So, you know, I share that with you to reassure you, like, if you keep on repeating this stuff, and like, you know, like Jomar likes to say, a lot of this is repetition. It really is. You know, repetition, you know, getting good at identifying it. Right now, for a lot of you guys, it's just wetting your feet, you know, like learning about it, looking at it, identifying it, understanding it. But again, when you start understanding and you start identifying, you can start applying, you know. Shadi, go ahead, share your screen with us.
I'm trying to find the signal.
There should be a green box that says share. For anybody who missed out on Euro USD, I think we might be getting ready to buy that again. Let me see.
I have to go through settings.
I have a question real quick while he does that.
Okay.
When you were on the charts, right? You were like, it takes hours or like the time. So basically you're trading. You're like on your phone the whole time, or you do it like I know it's certain times to trade, but during that trade, you're on your phone or on the computer trading the whole time, or you just like submit a trade.
Personally, I like peace of mind, you know, like I don't like, whenever I enter a trade, I mean, ¿cómo te lo explico yo? Whenever I enter a trade, I'm confident in the direction it's going. I'm not like assuming that the market is going this way. So like, if I enter a trade and I say, okay, yeah, I'm gonna hold this for 100 pips, 9 out of 10 times that trade goes 100 pips or even more, but I got in and got out when I wanted to. I'm not plugged in or stuck on my phone. You know what I mean? I'm with my son, 1 year old. It's difficult for me to be on my phone all day with him. So, you know, I built this habit of, before it was a bad habit that I had where I was like, anytime I had an open trade, it's like I couldn't lift my eyes off the phone. You don't want to be in that position, because now, like, you're messing with yourself every time the market goes up or goes down. Like, you know, Shadi, how many times have you entered a trade and it looks like it's going to reverse, but then all it was just a retest and then it kept going, but your heart was jumping because you were staring at the chart?
Too many times, bro.
Exactly. So now you know what you
Because
know
the problem is,
cause of.
I notice is when you look at the chart, like if it's 4 hour, I mean, you have to look at the resistance and support according to the 4 hours. And I used to look at the 5 minutes and the 15 minutes. Like if I buy and the 15 minutes is dropping,
Yeah,
and
it's gonna mess with you.
yeah, I feel like, you know what, and sometimes I close a trade like with $15, $20 instead of 200, 300 because I feel like it was gonna drop more.
Mm-hmm. And
Oh,
yeah, say that again, Chris Morgan.
so basically, you submit the trade, right?
Mm-hmm.
And then you let it go like the way it's gonna go, and then you just stop it when you at the point you want it to stop.
Yeah, 9 out of 10 of my trades. 9 out of 10 of my trades. If I say, let's say if I did my analysis and I said, okay, I'm gonna enter this trade for 60 pips. Then if I have a take profit on it already, usually it'll hit my take profit. But sometimes I'll just keep checking in on it occasionally, not every 5 minutes or every 10 minutes. I like peace, you know. Like I don't like having
No,
to.
yeah, of course. And I'm asking because I was kind of confused if you just stay on it or you let it, go the way it has to go, and then you just stop when you have to stop it.
Mm-hmm.
And yeah, I understand with the baby and with Ariana over here. Oh my god! So I
Yeah,
wouldn't be able to be like on my phone.
you're gonna go crazy on yourself, like staring at.
Yeah. Mm-hmm.
Real quick, I want to show this to you. Shadi, you see here? You see how the gap happened within the opening of price?
Yeah.
You see how it formed it was a bullish movement, and then it had a falling wedge, and then the price opened up above?
Yeah.
Usually that's a signal. Remember how you were asking me about GBP USD if I'm positive? It was showing me like, yo, we're gonna be good. Even right now, GBP USD broke out, but all it could be is the start of an accumulation. Especially with all the crazy GBP news that's going on. But in the end, I want you guys to remember that. Show me what you got going on here.
Okay.
Extend this trend line that you have on top. Bring it out more to where the gap and the candlesticks formed on the left there. Yeah, extend that out. Mm-hmm. See how it still respected that trend and channel?
Yeah, but I'm waiting for it to. If you see how it broke the trend,
Mm-hmm.
and it came back to retest the red line right here as a resistance.
Mm-hmm. But remember, even if I don't know why it's not letting me write no more. Even if the market breaks out and retests in this case, you can still see the market swing around and come back and retest it again.
Yeah, but if this candle, the 4 hour candle, if it closes below the green line, that means it's gonna go to the yellow box.
Mm-hmm. Mm-hmm. Which is what happened with GBP USD.
Mm-hmm. And then if it doesn't respect the yellow box, it's only gonna go all the way to the red line.
Mm-hmm.
So, and let's see how is it gonna play.
Danny, real quick, you see this pair right here, AUD USD. This is the pair I want you to focus on learning with, because this is when you're gonna get good at with your technicals, right?
Got it.
So this is the Australian dollar against the US dollar.
All right.
All right, Shadi, real quick. So you see here, you see how you have the breakout of the channel, right?
Mm-hmm.
I want you to draw a trend line below this previous fake out where the head and shoulders is. I don't know why it's not letting me draw again. Yeah, from there and bring it up. Line it up with that fake out. Mm-hmm. So now you can see all that, all right?
Mm-hmm. So that means if it doesn't respect here, it's only gonna do this. Here.
Mm-hmm.
I'm sorry guys, I hate using the
Exactly. It has a lot of
and then
there's a lot of consolidation continuing to happen. So if that's a possible scenario, correct?
yeah,
What's
because it's gonna come and break, it's gonna retest the trend line and the support at once.
there we go. Remember how we were talking about connecting your high and your lows?
Mm-hmm.
Now you see this dotted line that you have that's going in between the gap?
This one right here.
Yeah. What happens if you drag that down to the support?
Well, like that.
Mm-hmm. Check if that lines up with what you were doing the trend up above.
What do you mean? Which one?
Go on a larger time frame and let's see what happens there.
You're gonna see too many lines.
That's fine. What is that line for? What did you have this line for here? The one that we just extended.
Oh, this one I probably added just because I do want to go back and forth. So sometimes I just put them here,
Uh-huh.
and when I need them, I just move them around instead of just go back all the way to
Gotcha.
this one right here.
Understood. So let's look at the daily. Compress your chart real quick. Let's look at what's happening. No, compress it. Make it smaller. Mm-hmm. Compress it. Compress it. So we have the market dropping, right? We have the market dropping. Why am I not able to draw? Hold on.
I mean, the red lines is on the between the green lines is the 4 hours.
What line? Which line you talking about? You lost me there.
You see how I have two green line and red lines?
Mm-hmm.
That's for the 4 hours.
Gotcha. All right. The red line is for the 4 hours. The green line is for what?
For the daily.
Gotcha. So here you have anything in this daily chart sticking out to you? Does anything catch your attention in this like level of
I mean, if you see it right here, the green line, this one right here, right? If you see it respected as a resistance support here, if you look to the left, the yellow circle,
Mm-hmm.
you have it as a support, resistance twice, support again, resistance, support again, support again. Now is acting as a resistance.
Okay, what about where the double bottom at? What does that look like if you look at the chart overall? Does that appear like anything to you?
The double bottom, all the way in the bottom.
Yeah, what does that look like? If you draw a channel, right? If you draw a channel here with the double bottom being as the breakout, does that look like anything to you? I don't know why I'm not able to draw. Hold on, let me see if I can log on through my phone.
Head and shoulder.
There we go. You see that?
Mm-hmm.
That's what I want you to pay attention to. So if I drag my low from there, I don't know why it's not letting me draw.
Can I do it like this or I can't, right?
No, I would focus on at the bottom of the beginning of that trend line. I don't know. I wish I can draw on your screen to show you, but it's not letting me.
I think it's because it's a iPad.
All right. You see where the white line and the red line meet all the way to the left?
Sorry, here.
The next one. The next one. There. You see where that first circle to the left is? To me, that looks like the first shoulder. You see that? And then the double bottom is the head. So then what we're possibly seeing right now is the next shoulder finishing up.
Which is, I believe, gonna come down to, I'm gonna do it right now.
So maybe what you have right now, the reason why I'm saying this is maybe what you have, the market showing you right now, is exactly what you're predicting. You know, maybe the market's going to come up a little bit to retest the breakout and then drop to complete the shoulder, and then we'll possibly see the market shoot up again.
Oh, maybe it's gonna respect this one right here.
Correct. Correct. And if it doesn't, then now you know. If it doesn't, now you know that all she did was just come back to the start of that uptrend that you have drawn out at the top.
Mm-hmm. Because if I look at it and never retested this breakout right here.
Where I can't see it.
I'm going to show you right now. Give me one second. I just hate using this iPad.
Yep. Mm-hmm. Yeah, I was hoping you were pointing at that.
Yeah, it never retested it.
Mm-hmm. So, again, that's a possibility. What else? What's a sign of reversal here? You see how the market on a bullish push to the next of it started forming a rising wedge? Right?
Yeah.
I'm going to take over real quick so I can show them what I mean.
Sure, no problem.
So AUD, USD.
Yeah.
You see how, let me delete some of these lines. You see this bullish push and then the market formed a rising wedge here? If you pull up your cheat sheet, right? A bullish push after a rising wedge is a sign of a reversal. So that comes into play with not only the market failing to break this price area right here where I drew that similar box, but if you look at it, the market was in this downtrend here. And it was ranging within this channel for so long, right? That when it broke out of it, what does the market have to come back and do, Shadi?
Retest.
Retest. There we go. But one of the things keeping me focused right now is the fact that the market now is respecting my levels of support and resistance. You see here, the market respects this level of support, right? On top of that, we have another level of support here, and there's more down here. So if the market is going to come back down, where would be my best entry to catch the reversal is where we need to go ahead and look for more information on. You understand?
Mm-hmm.
Yeah. No problem, Danny. It's good to have you on, man. I appreciate you getting on with us.
Thank you, man. Have a good night.
You as well, brother. So you see how within the chart, sometimes we get caught up because of, this is what I was trying to explain to you. Sometimes we get caught up with, like what we wanted to do, but sometimes we forget that it's actually showing us what we wanted to do. It's just we're more focused on what we wanted to do as opposed to what it's actually going to do. So this is what I was trying to explain to you, Shadi. If the market fails to break past this level and the market goes ahead and creates this bullish push up, now we have an inverted head and shoulders moving up forward.
Yeah, I see.
No problem, Chris Maldi. I'll see you guys in the morning. You see what I'm saying?
Mm-hmm.
That's why I want you to get comfortable not only just observing what the market is doing, but what is showing you. Like get good at identifying what the possibilities are. Because okay, if the market does fail to break this green box we have here again, right, and then the market just drops here, right? We have a failed inverted head and shoulders, but guess what we have right here? We have another actual head and shoulders pattern that is formed. You see that?
Yeah.
One shoulder, here's the head, here's the other shoulder. And if it does come back and retest this line eventually, right, that'll be the confirmation of the breakout, and then we keep moving forward. Then we start looking. So that's why you see all these like different swigs of the market moving different directions, but it is respecting those key price points.
Yeah, I see.
Does that make sense for you?
Yeah.
Perfect. Alex, you were able to load that up?
Not on this. I can't get it on my computer on the laptop. It's because I don't have the like pro version, so I can only log on one device at a time. So I'm about to log off on my computer and try to see if I can get this. Because I'm looking at USD CAD, and it's looking like I want to sell it, but then part of me is like it might go up 40 pips to create that double top and then come down. So I'm just gonna try to be patient and wait for it.
Yeah. So anytime you find yourself in that situation, how do you back test it? Put like a small a 1 cent buy limit on where you think it's gonna go up, and like test it out. See if you did wait for it and it happens while you sleeping or something. Then now next time, whenever a situation presents itself like that, maybe that could be a route you take too.
Let me see if I can put this up. Nah, I logged off the computer, so let's see if I can.
Yeah, stop sharing. Let me see if you'll be able to share. Oh, any of you guys are still on this? Let's see who's here. Jomar, how's today looking for you?
It just kind of helps me kind of refreshing the mind of spotting these areas. I'm gonna be focusing on practicing this stuff, which I haven't, as I explained to you before.
No, I already know that the day's almost near. My man about to be a full-time trader.
Yeah.
Felicidades, bro.
Yeah.
But no, how'd you do today trading while we wait for Alex loading up his thing?
I only took one trade today, which was Euro USD. So I got like 50 pips on it because I was so busy at work. Right now, the next 3 weeks are gonna be a little bit crazy because I'm training somebody.
Mm-hmm.
But I didn't really. I only took that trade today.
Did you take the trade based off of what the system showed you, or did you apply your technicals too?
No, I applied strictly off my phone. I took that one off my phone this morning. I was just kind of looking at it, and based on how I have my little setup on my phone, it kind of everything lined up for me, and I took the trade.
Perfect. Maybe tomorrow, if tomorrow's not a bad day for you, I'd love for you to share some of the indicators you've been using and how you've been using it. Maybe some of the guys in the school might find themselves, feeling more confident with that.
Okay. You got it, brother. Actually, I was going to call it a night too, bro, because I got to wake up later at fucking 6 in the morning, bro.
Nah, you good, man. I'm gonna get Alex's charts, and then I'm gonna call it a day as well too.
All right, brother. Have a good night.
You as well, Joe. Thanks for getting on with us.
Got it.
I got my. How do I share my screen? I press share.
Yeah, and then share your desktop screen with us.
Okay. Screen. Can you see it?
Yeah, perfect.
How do I make it bigger? So because it's like all this stuff needs to go like this, right? How do I take this off?
You see the little.
Got it.
There we go.
So this is my USD CAD. You see, I have it on the 4 hour. It's on a bigger channel. Like if I close this out, it has little fake outs here and here, but it still respects like bottom and top all the way through.
Yeah. How many touches you have at the top? Start off.
We got one right here. Yeah. I'll count that as 2, 3.
If you press auto, you see where it says auto in the bottom right hand corner that's highlighted in blue?
Yeah.
You would be able to like actually like tap on that and then like actually like move the chart however you want. So if you like click on it.
Oh, there we go. It has 3 touches.
Perfect. So you notice how the market on all these points right here.
Oh wait, sorry.
No, you're good. You're good. If you long press, you see where it says sell and buy here? If you long press the 6 dots right here, if you long press this, you'd be able to hide the panel.
If I okay, that thing will go away.
Okay, so here, you notice how this level of support that you have drawn out right here. My intentions are asking me, my intuition is asking me, okay, where the market broke out right here in this area here, is this just a fake out in this time frame? Or are we looking for the market to continue going up? You understand?
On right here on this one.
Yeah, you see how the market broke out of that? Right.
Yeah.
It has to come back and retest it. If it fails to retest and continue going up, breaking past that channel that small channel you drew in it,
yeah,
then you may see that reversal kick in.
After it breaks this area right here, after it retests this right here.
Correct.
And then, because I have like I like trading like on the small charts, but I look at the big charts to see like the overall.
Gotcha.
Like most of the time, I trade on like 30 minutes and below, and an hour will like super confirm it, and then I go lower. So
yeah.
like this one, like this is the one where I have the minor. Why is it like this? I need to
reset your chart. If you right click on empty space and then reset chart. No, reset. Yeah.
Oh. Okay, here we go.
The last thing I want you to do is delete all your analysis.
So on this one right here, like it had this little thing right here, but it came right back in, and then it had it up here as well. I don't know why. Did my line move? Oh no, it didn't. Then it got rejected here by support. So like I have it right like where it is now. It's hovering the top, but if I look on the bigger time frame, that has a shot at coming here and then popping up. But I was thinking about selling it to there.
Gotcha.
It's telling it to there, and then from there, like I'll look at what the market does and then make my next trade.
Okay, so if you decide to sell it to there, what confirmations are showing you that this move is right?
First, the top of the trend.
Mm-hmm.
It hit the top of it pretty much and didn't get out of it.
All right.
That's one, and then let me see. Then it went down, it came back up, and it's building some like pressure here.
Mm-hmm.
I didn't put the pattern there, but it's building pressure there. Like if you try to push, it might. That's why I think I don't want to sell it yet, because it might push up again. Like it might try again to get out, and before it breaks, it comes down. That's why I'm like being patient with this one.
Yeah, I mean,
it kind of looked like a head and shoulder, no?
that's what I was saying. It could be a possible inverted head and shoulders right there on the 30-minute forming, and the bullish flag, that bullish flag right there, or however you guys call it, pennant, whichever term you want to keep for. If the market breaks out and retests and continues this pattern, I see this right here.
Yeah, that's why when you were talking about it, I was doing what you were, that little the wedge thing on top. I was doing it on my computer chart, and I was like, okay, I'm not entering this trade yet, because I still think it might get up here.
I mean,
like, over this level,
40 pips above, 50 pips above.
That's at 40. Yeah, give it like 36 pips.
Yeah, so you think about it, if you wait it out and it fails to break that area, as opposed to catching 40 pips, now you possibly can catch between 80 to 100 pips.
Yeah, that's one of my issues. I'm like so impatient, and it gets me sometimes. But
that's what I was saying.
I gotta be patient.
That's what I was saying. If it helps you like to be patient with yourself, draw your resistance area. Identify that if the market fails to break that area, and you put like a little buy limit or something, and let's say your take profit is back to down here again, right? Just a scenario that I'm giving you. Then you not only understand look, there's some divergence here. The market is showing a divergence between the price on the average closing of its strength index and the actual candlesticks. So that's a sign that you may see the market continue to go up. You see that?
Yeah, I got like the RSI is playing like
it's showing a downtrend, but the market's actually going on an uptrend. So that's a bullish divergence.
When they do opposite, is a bullish divergence.
Yeah.
Like in a sense, like RSI goes down, the chart going up.
I'll give you another example. Look. You see how the market is going up here, but from here to here was going down?
Yeah.
That can be a case as well. You see here?
Oh, wow, I thought it was the opposite.
Give me a second. 1 second. I gotta write this down.
There's different ones, Shadi. There's a hidden divergence, and then there's a regular divergence.
So which one? So can you, just for like note purposes, the one right here, where it's going down here and up here. What's the name of that one?
So you have your classic divergence, right? Where the RSI is making higher lows and price is making lower lows. Right? And then you have your hidden divergence where the price is making higher lows, but the RSI is making lower lows. And then what some people do is they look at the high of the candles and the lows of the candles. Let me see, where am I? So whenever the market's on a downtrend, but the price is showing an uptrend, that sometimes can show the breakout or a continuation. But in the end, all I really want you to focus on is just a simple one of, what a classic divergence is. Once you get good at that, then you start working at identifying the hidden divergence.
Gotcha.
All right, because remember, you start confusing yourself, and then you get wrong based off of that, and you start putting yourself in a tough spot,
Mm-hmm.
But let me see. I think for that trade that you were showing us, if you want to go back and share your screen real quick again.
Oh.
I think being patient may be your best option, honestly.
Yeah, I'm not. I told myself, I think I gotta learn how to be patient. So like, I'm gonna test it out right here. I'm gonna be patient. Like,
Yeah, tomorrow's gonna be a crazy day, especially with the whole Brexit situation.
oh, that Brexit was crazy on GP on
Yeah, you saw that?
GBP today.
I'll show you a little. I'm still holding some negative trades on that.
It was crazy because I saw that. I was looking at that trade and in the morning.
I woke up
like
to that.
I saw
that switch.
I woke up to I saw an article that said that the parliament was gonna like deny their offer, their deal and stuff like that. I was like, oh god, this is gonna go down, and I didn't take it. And then 200 something pips later, I'm like, damn.
Yeah, it was wild, man. It was wild. I got two $2 lots and a $5 lot that are down like 90 pips. You ever seen what that looks like?
Nah, I'm good.
But I mean, yeah, let's call it a night. We'll get back to it tonight. Tomorrow. Let's get on every day of this week. Let's put in some work. Let's try to finish the year strong with all you guys. And remember, if any of you guys have any questions, just contact me. I'm gonna upload this to YouTube and post it onto the school chat. So if you guys want to rewatch this again.
Sounds good.
All right, brother.
Thank you, man. Appreciate it.
No, I appreciate you guys, and I hope you guys all have a great night. And if you're in Kasha, I hope you have a great morning. And you guys enjoy your day, man.
All right, thanks, brother.
Yeah, thank you.
Same time tomorrow. See you guys tomorrow.
All right, have a good night.
Let's get it. Bye.